Happy Saturday, dividend growth stock investors. It's Colby the DGI Crab coming to report to you the good news in the dividend community. 60 high quality dividend growth stocks. That's what this channel focuses on. And on Saturdays, if there is a dividend increase to report, I am here to tell you about it. And this week I was maybe somewhat pleasantly surprised by the news that SBUX has increased their dividend. Now, the reason I was nervous about this, and a lot of you may be keeping tabs on this as well, SBUX got a new CEO, and that CEO came over from Chipotle. Now, Chipotle obviously is a stock that's done very well. If you go and look and see how that one has done over the last 5 years plus, it has been an absolute growth machine. And when the news broke of that CEO being hired by SBUX, which had been a very undervalued stock over the summer, trading in the mid-$70 range, that stock absolutely shot through the roof, got up into the 90s. And what did that mean? Well, it meant that I temporarily stopped buying new shares because it wasn't a great price for me to add new money to it anymore. But my concern is that the CEO is coming from a company in Chipotle that has never opted to pay a dividend to shareholders. So it made me wonder if maybe a new corporate culture coming in, that CEO might have just said, well, we didn't pay the dividend at Chipotle, and that worked out pretty well for us. So instead of paying off that money to shareholders, we're going to allocate that capital to some other things. Well, so far, so good. The new CEO came in and opted not to break the dividend increase streak. So we're going to take a look at that real quick. Now, remember, guys, I'm not giving you financial advice on this channel. I'm not a licensed professional. Do your own due diligence whenever you are going to invest in any stock or security. So SBUX is going to increase that dividend by 7% the next time they pay out that dividend on the 29th of November. They typically do a fourth quarter dividend increase, so this was right on schedule. It's going to go from 57 cents a quarter up to 61%, which represents a 7% dividend increase. Now, SBUX is in the Tier 2 category in my 4 tiers, meaning it is in the 31 to 41-year-old investor range as far as the timeline that you should be looking at to live off of your dividends. SBUX makes my Tier 2 category because we're usually getting something that yields around 2% on average with a good, solid dividend growth streak, at least in the high single digits. And even with that dividend increase, you'll see here it's still not into the buy zone for me, which is where the yield is 30% or more above the 4-year average. Their increase brings their current yield up to 251. 4-year average is at 207. So personally, I do need SBUX to get cheaper, but when a dividend is increased, our target price for when we want to buy it actually does go up in line with that. So hopefully you all are tracking with me on that. So I'm pretty happy with that. This is going to be the 14th year in a row that SBUX has increased the dividend. If we come over here to Seeking Alpha, remember, if you go to Seeking Alpha and look up a stock, you just go to the Dividends tab. We're going to take a quick look at the dividend scorecard. This 13 is going to go up to 14. SBUX has a 5-year dividend growth rate of 9.63%, currently yielding 2.51. This is a nice dividend combo factor. If I can get the current yield combined with the growth rate to be comfortably above 10%, especially here in Tier 2, I'm very happy with that. Payout ratio, fairly comfortable, sitting here at 63.8%. The closer to 50%, the better for me in most industries is where I like that payout ratio. It's that nice balance of rewarding shareholders with dividends, but also having plenty of money left over to do other things like paying off debt, expanding, share buybacks, etc. So SBUX actually did start paying that dividend 13 years ago, and they have increased it every year since they started. If we take a look at the historic growth rate for SBUX, we can see here last year they did an 8% dividend increase, 8.7 the year before, 9.5 the year before that, 12.75 the year before that. And then their early years, they were really increasing that dividend aggressively. The yield was a little bit lower, more in the mid ones. So when it first started out, it kind of had more of the characteristics of a tier one stock, meaning something that yields in the ones, but grows well above 10, 12% annually on the dividend. But as you'll notice with the stocks that I focus on this channel, I'm generally not jumping all in on a stock in the first like 5 years that it starts paying a dividend. I want to get some history built up so I can get some reasonable expectations about where exactly that stock should fit for my long-term buying plans. And with StarBucks, it has, I think, kind of predictably settled more in that tier 2 range. I think we're going to see this high single-digit growth continue based on where their financials are at right now. If they could do better, that would be great. But with a 63% payout ratio, I'd be really surprised if we saw some 20% plus bangers like they used to do back in the 2010s. But that's all right, so long as that CEO can keep churning out 7 to 9 or 10% increases year over year. That's going to be just fine with me, especially because I'm typically not buying StarBucks until it's yielding in the very high twos as opposed to the mid twos like it is at present day. So anytime there's a new CEO that comes along, that can bring a culture change that could impact the dividend, and it'll make me a little bit nervous sometimes. But so far, so good with this one. We'll see how things go for StarBucks in the long run. But for right now, this crab is pretty happy. 7% is certainly on the lower end of expectations for me, just as far as tier 2 stocks are concerned. I'd really like to see more like 8, 9, 10%. But again, this was one that if I had to make a short list of the 60 stocks that I would have been the most concerned with in terms of are they going to continue doing increases as expected, StarBucks probably would have been in my top 5. And honestly, it's just because of the new CEO, and I wasn't sure exactly what he was going to do. I just know how Chipotle operated under his guidance in terms of not paying a dividend at all. Ugh. So that's the video here for today, you guys. Let me know if you were gobbling up Starbucks shares earlier this year in the 70s like I was. Feeling really good about that position right now. I'm happy to let it just sit and drip. And there's a coffee metaphor in there somewhere, right? Whatever. Anyway, guys, I've got some weekend chores to do, so I'm going to go take care of that right now. I might even get me a Starbucks at some point between now and Monday just to celebrate the increase to my passive income. Email me your questions, dgicrab@yahoo.com. Let me know if there's anything that you'd like me to cover. If you'd like me to do like a portfolio review or just answer any general questions about my strategy, I'm happy to do so. And hey, I might even make a video response on it if it has a requirement of a bit of a longer form discussion-oriented answer. Take care, everyone. I hope you're having a great weekend.